Have you ever noticed a property advertised as sold and then come back on the market for sale just a few months later? Apart from there being a big problem with the property, the most common reason is that the sale didn't go ahead because the potential buyer didn't understand what they could afford. So why would someone make an offer they couldn't afford? Good question. And in this video, I'll show you why and how you can avoid making that same costly mistake for your first home purchase. The most common mistake that I've personally seen was the buyer thinking they had a 20% deposit and a pre-approved loan amount that they thought was enough to cover the offer they made. But what they really had available was only 20% of the price they offered to buy the property for. Now you may be thinking, what's the difference? That's the same thing. But wait, let me explain. If you're too focused on the offer price and not on the transaction value, you could be making a very costly mistake with your first property purchase. Here's why. Many first home buyers don't take into account that the money they save also needs to pay for the buying cost as well. These costs can vary greatly depending on where you are looking at buying and can include legal fees, local government taxes like stamp duties, bank loan application fees and charges, reimbursing the owner for property ownership fees paid in advance, insurance, buyer's agent fees, and building and pest inspection reports. In a location I was looking at buying at recently, I looked into the local market and the buying costs for a $1 million property, and they were $57,000. $57,000 is 5.7% of a property worth $1 million, and that's huge. So where does the cash come from to pay for these extra costs? The loan? Sometimes, but usually not for first home buyers. For first home buyers, it usually comes from your cash deposit saved up. That means the value of the purchase price saved may end up being a lot less after paying the buying costs. Most sales won't complete until all buying costs are paid too, so you need to have the money for those costs readily available. If your bank allows you to have a smaller deposit like 5%, you could potentially have no money left for a deposit. If you were hoping to have a 20% deposit saved for your loan, you might also fall short, which means you could also have a higher interest rate, less choice of bank and loan features, higher loan setup fees like mortgage lender's insurance, which protects the banks and not you, and your future refinance options may also be limited for a while too. Having a deposit less than 20% could mean you need someone to guarantee your loan, like mum or dad, and in the very worst cases, you might not even get a loan at all and lose some of your deposit for wasting everybody's time. That is why you'll see the property come back on the market a few months later as the seller scrambles to find a new buyer. Don't be that buyer. There is a simple way to avoid this mistake, and I'll show you how. But first, please remember to press the like button for this video to help share the lessons to others. And if you also want to see more videos like this, then please subscribe to my channel. Being prepared will help protect your hard-earned deposit and secure that dream property. Now, I use a template for estimating the total transaction value of a property purchase before making any offers, and it looks like this. Let's say I wanted to make an offer of $1 million for that property in my area, and my bank requires a 20% deposit for the type of loan I'm looking at. Let's also say the bank was willing to lend me a maximum of $800,000 in my pre-approved loan application. I would enter $1 million here at the top in this box here for offers. Then I would enter an estimate of all those buying costs in this section here after getting some good advice on this property. At the bottom you can see the buying cost adds up to $57,000 or 5.7% of the offer, and down here you can see the total transaction value is $1,057,000, not $1 million. Now, I am not eligible for any government tax incentives to buy this property to subsidize these buying costs, so I'll leave it as 0 in this box here. If you were eligible, then you could write them here as a negative value to help reduce the buying costs. Next, I would need to include the 20% deposit requirement here and enter it as 20%. With these numbers, you can see that I would need to have at least $257,000 saved up to have a 20% deposit for this property. The $257,000 amount is made up of 20% of the $1 million offer price, which is $200,000 plus $57,000 in buying costs. But because I only had $200,000 saved up, which was 20% of the offer, my deposit would actually only be $143,000, which is 14.3% of the offer price and below the minimum required by my bank, which could be a problem for some lenders. But what if my bank did accept a lower deposit of less than 20%? Then I'd still have a problem. This is because my pre-approved borrowing limit was only $800,000 and now I'm short $57,000, as you can see here in this box, since I'll only have $143,000 left over after paying for the buying costs. This is the case even if the bank required less than a 20% deposit, as you can see here. As I change the percentage down to 5%, I still don't have enough funds available to meet my $1 million offer price. The only way I can do it is to save more cash, or apply for another loan and hope they give me more money. If you do this calculation before you make an offer on a house, you can set realistic saving goals here to reach the minimum required to be saved based on your offer. So I plan to save the extra $57,000 over 1 year, which I can set the date here to calculate. I will save this amount on a monthly basis, which means I need to save a minimum of $4,750 per month to hit my new savings goal by this date. I've included a link in the description of this video of where you can find a copy of this same calculator template that I used in this example. It is a good idea to use a template like this to take a closer look at the numbers with different price ranges of houses you are looking at and the available savings you have to try and find ways to reduce your costs and increase your savings to meet your home ownership goals. If you're struggling to find ways to save for a deposit, then I recommend that you find a way to track your expenses and budget, and the video appearing on your screen right now can help you do this in a matter of minutes each month with no subscription fees. Good luck with your house hunting, and I'll see you next time.